All right, so welcome to another video. Today, what we're going to do is we're going to take a look at 5 criteria to find great stocks to trade covered calls on. Now, if you're just getting started with me, feel free to check out our website, going to tradersfly.com, tradersfly.com. And you can see there's a lot of freebies in there. We've got some courses, some coaching. If you want to work with me on covered calls for even 3 months or so, you can learn a lot more on there. And we just launched some great new courses as well. Now, if you want to really find great stocks for trading covered calls on, then definitely take a look at getting started here on CBOE. So search for CBOE options historical data. And then what you can do is find a link here. You'll be able to find something from directly Chicago Board Options Exchange. And right here, what they have is you could say, okay, you can look at all symbols, okay, historical data. So it's under historical data, then historical options data, all symbols. You could do BATS or CBOE. We could do volume, and then we can do the year. We could say, hey, how about for August? And then once you download the report, what you'll be able to do is see the very liquid options that are being traded. Now, these are not all perfect, but it will give you kind of a report somewhat like this. And then you'll be able to see, and you can also sort, of course, by the volume here as you do the Excel. And we just do sort by volume, largest to smallest, voila. So you can see these are the ones that are highest volume: QQQs, Tesla, Amazon, IWM, NVIDIA, AMD, BBBY. But some of these you may not want to deal with. So I'll give you some thoughts as far as trading covered calls on. Here's kind of our note. So stocks that are great for covered calls, you want them to be liquid. Okay, so liquid, easy to get in and out of. So if you struggle getting in and out of them, that might be a problem. Do they have weekly option contracts? Not all of them do. Is it a long-term stock you might keep in your portfolio? Generally, maybe bullish, because covered calls is a strategy where you're making money from the upside. So you'll probably want to be generally bullish. Does it have earnings, or is it an ETF? Okay. The other tip I'll give you is kind of, $60 plus might be, because this is kind of a long-term stock. Because if you trade like a $5 stock, it may not have the option premium. So let's chat a little bit about that for a second. So take a look here as we go in and look at some of these. Like here we've got BBBY that was very active, and then AMC, but I probably wouldn't do covered calls on them. And here's kind of the reason. So if I go BBBY, because it's one of those quick stocks this month, it's a $7 stock. So if you look at the option premium, even 16 days out, it's a lot of premium, but there's not a ton of strikes. Okay, and if you look at the 9 days, you can see right here, but the implied volatility is 234. Crazy. How about AMC? Take a look. These are, again, 9 days out. You could see you're only getting 50 cents here, but 151 volatility. So I'll show you a different example here. CCL, a little less volatile, but look at the premium. So here's a bit of the issue. 9 days out, boom. So these cheaper stocks are not always the best. You might have to go like 30 days out to get any kind of premium here. Whereas when you start going to like something like GoDaddy, you might be able to do it with a premium because you have, 85, 25 cents, or going 44 days out. But the issue here is, notice we don't have weeklies. Okay, so there's a bit of the trouble. There's no yellows here. So let's go in and take a look at something like AMD. Okay, no, one more higher. Sorry, because I'm zoomed in. AMD. Okay, so you can see right here, we've got weeklies and there's tons of expirations, whereas GoDaddy does not have that. So that's a bit of the issue there when you start looking at it, is that the liquidity or weekly options are not there, maybe with something like GoDaddy. Okay, now earnings and ETFs. So you could always go in and watch out for earnings on stocks. Like you can see Nike's got earnings coming up here. There's a aftermarket, you can see all that, but you might decide to do things that are not earnings dependent, like XHB, let's say. They don't have earnings, it's just an ETF, or even SPY, that kind of stuff. XHB, XLK, XLE, you know, these types of things where, oh, okay, you don't have to deal with the earnings side of it. So anyways, that's kind of my thought, is that when you look at stocks that are great for covered calls, I'd say watch for liquidity, easy to get in and out, weekly options. If they don't have weekly, they might not be traded as easily. Longer term, maybe $60 plus, things you'd keep in a retirement account, generally bullish, because the strategy on its own is you're, you know, buying shares of stock and you're selling it already at a further higher price. So that's a covered call. And then do you want to deal with the earnings in the, or an ETF maybe? So again, personal preference with that kind of thing. So I hope that helps. Definitely check out the CBOE website. I think it'll be helpful. And you can check out our website. There's a ton of courses, freebies, much more, and coaching if you're interested in that. All right, thanks for joining me. Enjoy the rest of the week ahead. Feel free to check out some of the other great videos, sections, trainings, freebies right here down in the description below as well. And I will see you next time on the next video.